Hello, from the London office of the Association of International Certified Professional Accountants, the unified voice of AICPA and CIMA, I'm Kyle Hannon, and this is the Go Beyond Disruption podcast. It's a weekly podcast with insights and perspectives from inside the accounting and finance profession that help you stay ahead of the curve, whatever part of the profession you work in and wherever you happen to be based. This week, RPA and robots by subscription. We're talking to the co-founder and CIO of startup company Electronique, Dmitry Karpov. Hi, Dmitry. Where are you joining us from today?
Hi, Kyle. I'm calling from San Francisco, from our only one office in the world.
You're just getting started with your Friday, aren't you?
That's my Friday morning. It's pretty sunny. It's the best time of the year, like late September, early October in the Bay Area. It's like a summer for us.
You have been working in this field for a while, but the reason you came to our attention here at the podcast is because of your connection with the Startup Accelerator program, which is part of the work of CPA.com. And your company, Electronique, is fairly new, but it's built on a number of years' experience in the profession, the industry, with this technology platform that I'd like to start with. So before we talk about you and the Startup Accelerator program, give us a sense of how you came to where you are today, how you moved through the industry, how you became so interested in RPA.
My journey with RPA started during my time at Ernst & Young. I was part of their global innovation team here in Palo Alto, and RPA stands for Robotic Process Automation. That's automation of repetitive actions in computer systems. Really, when RPA bots work, they look like invisible workers if you're reading with mouse and keyboard. And as you can imagine, in accounting, in professional services in general, there's a big opportunity to implement such bots because many business processes internally or externally are repetitive and routine in nature, and they're rule-based. So if you teach the bot these rules, you can get a lot of automation gains. And we implemented RPA internally, externally. We became, I think, the largest professional service firm in the space, with the largest practice. Inside the firm, we have thousands of bots doing a lot of intra-firm transactions, a lot of internal processes. And I was very fascinated to see the impact of this fairly simple yet complex from technology standpoint products to really make people much more productive. I've seen processes that can be automated up to 80%, and means that the same person can do 5 times more work. And I've seen companies that put a bet on automation as their major growth driver. They want to grow without increasing headcount when possible. And I very rarely seen people letting go because it's not automation of a job or automation of a profession. It's automation of the routine in the nature of the job. So I was very fascinated with this technology, but I was very surprised to see that mostly enterprises buy it because it was quite complex, and pretty much the business model of major vendors, of early vendors, let's call them enterprise vendors, was such you need to find processes that are at scale so you can justify return on investment in acquiring expensive software, in hiring expensive developers, in doing process analytics and so on. So it became really enterprise thing. While it's great business for big consulting firms, I always believed that any firm of any size can harness the benefits of RPA if they use the right approach, right tools, and as later we've learned, right automation partners to do that.
Sounds like quite an exciting and very relevant business. How did you pick the name Electronique? Let's just spell that. That's electro and then neek as in N-E-E-K, not as in unique. Strange kind of word. Where does it come from?
Yeah, neek stands for, it's a street jargon for nerd plus geek. So it's someone who can do complex job, but the job that no one likes, like a routine, repetitive stuff. And Electro means that it's pretty much not a real person, but a bot or a robot. Of course, there's a bigger analogy to that, but it's really hard to understand if you didn't grow up in ex-Soviet Union, because it was a very popular sci-fi book in 1950s or 60s called Adventures of Electronique. It was like a cyborg twin to a boy, and that pretty much helped him to do a lot of stuff. And it's easier to build relevance when you use such name.
Formally, you are co-founder and CIO, Chief Innovation Officer.
My friends actually started Electronic. I joined them later. They were doing RPA business, and they came to the same conclusion that I did, that they have success in banking, success with big enterprises, and they have a lot of demand from smaller companies. But once these smaller companies understand all the costs of the technology, they walk away from that. So they started the company on the premise to make technology more affordable, essentially cheaper for the end user. And when I joined, we pretty much decided to focus not on the end users of automation, but on firms that run automation business that already want to service the small companies in the RPA space. And we just make a tool that is good for them to be able to build bots and sell them by subscription, which is very comfortable and affordable for the end user. And that's how Electronic pretty much got to the point where it is right now. We have 125 people in 5 offices, probably more than 200 partners who essentially build their automation business using our product, including some very big firms that I'm more than sure that in accounting profession, what's BDO or HLB or Xerox is our recent client. And together, these 200 partners, they all have own clients for whom they develop bots, mainly by subscription. So we probably can say that between 500 and 1,000 companies today use Electronic to automate their routine.
I've seen you described as a citizen automation evangelist. So you were already an evangelist by the time you joined them last year, because it was last year that you came on board, wasn't it?
Yep, 2020. I pretty much joined the time the company went to Y Combinator. The space is like a, Cambridge and Harvard of startups in the world. And being there, of course, helped the company a lot. And I was very excited to be part of that program here as well.
And with the CPA.com Startup Accelerator program as well, you've obviously become used to standing in front of a room full of people and making a case for the technology and making them see the opportunity in supporting a company in the startup space, a company like Electronic. So when you stand in front of a room full of people who are interested in what you do, but who may not know much about it because they're not the kind of evangelist, the innovator that you are, but still their support and their interest is important. How do you make the case for this technology to a room full of people like that?
Yeah, there are typically 2 types of audiences, and they could be well described actually through the lens of AICPA Accelerator. So I've learned a lot. While I spent time at Big Four, and some long time at Big Four, I never understood the accounting business as a whole market, where there are small firms, where a lot of individual CPAs are driving tax returns. And if I will be in a room with accounting firms that don't have any technology practice, but they have a lot of routine, I would tell them a few simple things. First of all, there's a cool technology that can automate pretty much anything that could be described by an instruction. Now you know about it. Second one, it was hell expensive 5 years ago. Now Electronic made it so affordable to you that you actually don't even need to buy the software. You should go to one of our partners and they will find something that makes sense to you from pricing standpoint. And subscription here comes in handy because it allows you to minimize your initial investment in automation and essentially have these costs allocated based on the consumption or time or something like this. And I will tell them that it's so easy to start because you don't even need to think about technology. Our partners who have Electronic software, they will come to you, they will do everything for you. It's complete peace of mind. And many firms, they very interested to learn and to get a few bots maybe up and running. They start usually with small POCs to attack their most obvious thing. But then once they have the first bot up and running, their organizations, whether companies of 10 or 50 people or 200 people, they start to see how the work of that person who now uses bots changed, that they don't spend time on routine. They want to have the same bots for themselves. And that's how the automation journey starts between that accounting firm and some technology provider that is Electronic partner. But the AICPA gave me opportunity to also be in a very different room where accounting firms of that size or bigger, that do have technology practice, are evaluating opportunity for themselves to start building bots for their clients. And I think accounting firms, they uniquely positioned to succeed in RPA space because the success there depends on your ability to understand and to work with client business processes. And accounting firms, they know their client business processes. So I talked to them and explained them that, again, in the past, you thought about RPA as a service, but you looked at your client base and figure out there are no enterprise clients. You work only with mid-market or small businesses. And technology, just from software costs, were not affordable to these companies. But now it's different. We became one of the most, I think, the fastest growing vendor in the space. And what we offer to you is pretty much a ticket in this business. And we will not only give you the software, we will educate you, we will be training you on marketing, on sales of automation, and so on.
I've got two questions for you. One of the questions is about an abbreviation you used, which I'm not familiar with. You talked about a POC. What is that?
Proof of concept. That's usually the first project or like one of the few projects in the beginning. You understand that ROI will be positive. So you're automating some real problem, but you're not necessarily focused on the highest, most impactful process because usually they are more complex and require more time, more investment. So you start small. And that's a great way to get use the technology. And also you usually start with something that provides positive ROI on your investment anyway.
Right. Another question for you would be something that takes us back to the title of this podcast, Robots by Subscription. You talked about making this a solution that was much more affordable than perhaps people, companies, and practices realize. Is that because the subscription model is becoming more and more the way business is done today, where people are renting, using almost a pay-as-you-go approach rather than outright ownership of a process or a service or a particular asset? I think you talked about it as an MSP model. Am I getting that right?
That's right. So MSP stands for Managed Service Provider. And typically in the core of managed service business is I provide some professional services to you. In our case, it's development of the bot using RPA software. And I guarantee you the peace of mind with using the software because I will be in charge for running that, for maintaining that solution if something changes. For instance, you automated entry of some digital docs into your CRM system or your accounting system, custom docs, very unique to your client. And now that client has a new template. So for bot to work correctly, a developer should take a look at the template and make a few mapping steps, maybe invest a few hours of work or 1 hour. It's called maintenance. And in managed service, you as a client of automation, you don't actually have this bot on your balance sheet. It's not like your software or your solution. You pretty much use that as a service for you. It runs on your computers, on some other computers, doesn't matter. But you rely on the service provider as someone who delivers you the automation gains. And in the past, when we started Electronic, this model didn't work well for one big reason. All vendors in RPA space, they required the end user of automation, the company that uses automation, to own the software. It was very expensive. And they looked at MSPs as channel partners, as someone who comes to the clients who bought the software, takes their software and does the work for them, like one-time implementation work, maybe some maintenance, and goes away. In our model, we suppose much tighter cooperation between MSP and their client, the end user of automation. We expect them to be in relationships when a client pays on a monthly or annual basis certain fee for all the bots they have up and running to the managed service provider and not to us. We are not interested in their money at all. We let managed service providers capitalize on these opportunities. And managed service providers in exchange make investment in acquiring our software. That comes to them as a fixed cost, but more client projects they make, again, we don't charge them for that, more money they have. So it's kind of fixed investment plus what you get as a return depends on your ability to find processes, to automate them, to build great client relationships.
Oh, so what I'm hearing you say is that this may be something that people don't realize, may actually sound a bit counterintuitive. You're saying that the future of automation is more a service business, not a technology business. Is that right?
Absolutely right. I like to talk about robots and restaurants. I read an article in Wired magazine this year about what's called a restaurant robot operator as a job description. So many restaurants, they buy sophisticated robots to do dishwasher cleaning, to clean tables, to wash floors. And these robots from time to time stuck. They encounter some challenge. Let's say they cannot find electric plug or charging station. In this case, there is a robot operator, someone who sits remotely and serves maybe 50 robots in the country. If one of the robots stuck, they connect to the robot, take control over video cameras on all the motion, and fix the situation. So now, instead of having 50 hosts in restaurants, you can have one host and 50 robots across the world. Who owns this robot? Does the restaurant own the robot? No, they lease it from the same company that employs human operator. And they essentially use it as a service. It's a service for them. They lease the bot that comes with the robot that comes with a peace of mind. And in software robotics, in RPA space, we see the future exactly the same way. It's a complex technology, very powerful impact. But why would you need to have the technology capability if other entrepreneurs build whole businesses around hiring good developers, training them, building nice bots with best practices, and so on? So we believe in the future of automation as a service.
Well, no matter what its future may be, the past of any topic relies a lot on vocabulary of terms. I've asked you about a couple of those abbreviations. What 5 items of jargon should everyone be familiar with when talking about RPA?
Great question. So RPA itself, robotic process automation. Then I think it's important to understand what process mining or task mining is, because typically it's the first part of any RPA engagement, is you identify processes that are good for RPA, and you want to find processes that take the most time in your company across all employees. Historically, consultants did workshops. Now there are technologies like process mining or task mining. There are different software technologies that allow you to do that automatically. Then it's important to understand what a bot means. A bot means pretty much a ready-to-execute solution that can be launched in 2 different ways. One will be compared to launching the macro in Excel. If you did it once, you remember, you click on the button and you take your hands out of the keyboard because some calculations start to happen. RPA bot on a very high level can be compared on macro on steroids. You launch it on your desktop computer, you take hands off the mouse and keyboard, and it looks like invisible human took your place and does the work very, very fast for you. This is called attended automation. It means it's attended by a user, a real human. Sometimes in this case, bot can make a stop when they want a confirmation, an approval, or have a question to the employee. And there will be a pop-up window asking to confirm something or maybe to input something. It's called human in the loop. You kind of have bot and human working together at the same time. And other way to launch automation is to run it on a server where the bot works 24/7, just waiting for certain triggers to start the process or just doing the process. And this is called unattended automation. In banking and other enterprise, unattended automation is much more impactful in general because there are processes that are at scale that you can isolate and delegate the majority of them to a bot that will do now work not of 1 person, but 10 people. And because of that, historically, to have an unattended bot running in your company means you need to invest at least $10,000 in every process. With Electronic, we made the cost of attended and unattended identical, actually 0. So we made that revolution that was quite loud for our market, completely invisible elsewhere. But we pretty much said, it doesn't matter which way you employ automation. Human plus robot working together, or robot works as a standalone thing on a server. We don't care. We really want everyone to have more and more and more bots, and we will make more money on scaling inside companies than on automating one but impactful process. For us, we found that we'd better scale to like 1 million companies, and we'll pretty much make money from our partner network than on individual users of automation. Really makes the technology scalable.
I think I counted 5 terms there. You talked about what RPA is, you talked about task mining, you talked about what a bot is, and then you talked about attended and unattended automation. So the human in the loop side of things, I think, so that's our 5. That's excellent. Okay, so what about when you stand in front of a group of people talking about this technologies? Let's go back to standing in front of a room full of people, whether it is something like Y Combinator or the Startup Accelerator at CPA.com. What are some of the misconceptions that you hear time and time again when those hands go up and people say, oh, I don't think this is for me because ...
We are working in a relatively young industry, being honest, like it's 5-6 years old, but it has some misconceptions. And they all rooted in the fact that 5 years ago, RPA business was largest enterprises in the world buying from the largest international consulting firms. And pretty much the first misconception, that's for enterprise only because it's very expensive. And because you need to hire very expensive developers. This is not true. We have many, many partners across the world who hired developers who had no experience in RPA. They just knew basics of JavaScript and Python, and using no-code, low-code tools that we provide, they were able to build bots like in weeks. And the price point went down to what depends on the partner you're working with. Some of them do bots for small businesses for a few $1,000s a year. That's it. Includes everything. The development, maintenance, and so on. Some of our partners, they're large enterprises, of course, they work with enterprise clients, but they usually automate hundreds of processes there. So the first misconception, that's expensive. Second one, that's only for enterprise. And I think the third one is we are late to this game from either end user perspective. Our business is less competitive now because we don't employ bots, but others do. We cannot catch up. Or for those who start business or plan to grow business in this area, the misconception is the market is already crowded and there is really no space for newcomers. This is the biggest misconception because this year RPA maybe will hit $3 billion globally as a market. But we see so much opportunity in SMB and mid-market and long tail of enterprise processes that sits there unautomated because there was no business case and ROI historically. And now we're changing that this will be the greatest, I think, money-making opportunity for managed services in the next 5 to 10 years. Just a lot of companies will be discovering that for themselves. They wanted to get RPA either running inside their companies or they would be opening own businesses in the space. And it's not late. It just starts. What we see right now is very similar to what cybersecurity was in the past or CRM systems were in the past, when it's really not big companies that start in that. But then that becomes mainstream. And there are many professionals who already have experience in the business, in development. They live in big consulting firms to join smaller companies, to start own companies. And this market is really up and running right now.
When you're talking to people and they see the opportunity, obviously they're going to be looking at this very carefully. They'll be assessing it and evaluating it. So what 3 things do people considering RPA always ask you about the platform? What are some of the most common questions when people understand there's an opportunity, but they want to know what the opportunity means for them?
So the first question from anyone who thinks about the opportunity is, okay, is it really true that all companies have a routine that can be automated with RPA? And general answer to this is yes, but not all companies are in a stage where they can afford any investments in technology, or some of them have very unique processes. Let's say we're talking about small creative digital agency. Let's say the only one use case for RPA bots there could be transforming thousands of images or something like this in a certain way or form, but nothing else. Nothing in accounting, they use SaaS products only. But in general, majority of businesses have a lot of routine to automate with rule-based approach, which RPA does. And we did many studies. We looked at, we receive a lot of leads, like this smaller mid-market enterprise companies that come to us. They want to get connected to our partners. And we later collect the feedback from partners on like, what's the business case there? We're able to do any business with this company. And in this moment, I'm fully confident that majority of small businesses can invest up to $50,000 a year with high ROI, which is closer to like one full-time equivalent of cost. So think about this. Let's say you have a company of 50 people. Instead of adding one more person to headcount, you enable automation at scale for all your employees. So what will be more beneficial for your business? In many cases, adding technology to your processes, rather than hiring more people. And honestly, I think that people will expect now when they join new workplace to have automation available for them. People don't want to do routine work anymore. It's very interesting. It's maybe very different when you think about, it's very kind of cliche way of thinking, but Some people just happy doing routine. Yes, such people exist. Not so many of them too. But there are many people who, when they switch job, they're asking about what technology stack are you using? Am I going to spend days in spreadsheet, or you will give me nice data and at my fingertips? And all businesses across the world, they become more and more data driven. So for any employee now, having timely access to data is very important. And that's the bar that managers put for their people. Majority of businesses have gaps in their IT infrastructure to get this data. So RPA comes very handy for businesses of any sizes. That's the major question. And the bigger companies, when they ask us, they very legitimately ask the question, you came to this market later than others. You tell me that I can take your product and go to Bank of America and kick out some other vendors from it. From business case seems very legit, but like how I can believe that your software is good enough to compare with companies that have billions of valuations and invested hundreds of millions of dollars of investors' money in their product. We have very smart developers. Yesterday, we signed our biggest deal so far. Xerox, Fortune 500 company is our client now. And of course, they tested us against all other tools, and they came to the conclusion that we are the best for their needs.
Congratulations, that's really
Thank
good.
you. I learned about it after we connected yesterday.
I suppose the question then is, if someone does come to you, you said any practice, any size can benefit from this automation. Do you get any questions about how much revenue automation will help generate? Or this is quite a loaded question. People often worry about reducing overheads. That must also be a factor. How do you deal with those types of questions?
So these are very right questions. And I'm so happy when I hear them, because it means that people start to think about the business and the business opportunity. And of course, good entrepreneur are not to succeed in this, you need to be good entrepreneur in general. It's not about technology only. It's about the way you think about the business and how you run it. So having these questions early in mind is critical. Don't buy the vision, buy the business opportunity, and that could be validated by pretty much looking to other partners or by looking at success stories of either clients or partners. But the logic is fairly simple that yes, you don't pay bot 5 times more than you will pay for a human. If they can do 5 times more work, you pay less. And usually I think clients are looking for at least 2x return on their investment. So let's say if you're automating the job of someone who can work for, let's say you're automating equivalent of 5 full-time employees. Doesn't mean you automate 5 jobs. It's really it's allocated across multiple employees and multiple departments. So let's say $250K US dollars would be potential process cost savings. How much would you invest in automating that? And what we see is typically clients are very comfortable investing or paying on subscription basis like half of that. And when we look at the benchmarks, pretty much it's a professional service business. It's driven by people you employ. They are developers. And you can estimate the revenue per RPA developer. Currently in the States, it's in a range between 150 to 250K a year. That's how much a company that employs them can make in RPA space. And as you can see, software there is relatively negligible compared to, in this business, it's still complex technology. Good developers build great bots, and they provide a lot of value. So the value add of human in automation, surprisingly, is much bigger than value add of technology. And because of that, typically for managed service providers, human costs are much higher than any kind of technology costs.
That's interesting. And I'm sure many people may not have expected that kind of answer. Is there a question that you wish more people did put to you when exploring and assessing and evaluating the potential of RPA for their practice or their business? What's a question you think people should be asking more often?
How do I build a brand in this space? Because that's the right question for those who start to think a bit long-term than, let's say, a year or 2 years. In this vision of automation as a service business, you can build a very big company to provide services for your target customers. What do you want to be known for? Would you like to specialize in a process, in a function, or in an industry and be the best in serving, processed food companies in your country? They will have quite similar process, so you can get a lot of synergies by focusing on similar processes. Or you want to be the best in your city and you would like to be industry agnostic. Would you like to work more with greater number of small companies or smaller number of enterprise clients? These are all questions that you need to pretty much think about. I would say maybe not from day one, but from months 4, when you will start getting the first value from your investment and starting business in this space. And I typically work with our partners, with their executives, on helping them to put their head around what will be the end kind of state of their business.
If you're intending to be a player, a company that offers this in any way, once this technology becomes commodified, you then have to make sure that you've already built yourself, your offer, and your company as a brand. Is that what you're saying?
Absolutely.
People will experience and encounter you and Electronique in many other places in the future as you grow. Where can people link to you in real life? What's the best place to keep you on their radar? And where do you suggest they go to learn a bit more about the bots that they could be subscribing to in the future?
Sure, that's our website. We do have a bot library section there, which is for you to understand what bots can actually do. And you can actually connect there with those partners who developed these bots in the past and pretty much start working with them on getting a bot like this for yourself. We also have the most popular blog in the industry. So if you just want to stay on top of the industry news and to see how other managed service providers, if you're in this space, or how end users use automation, feel free to go there. There are many tools like ROI calculators and so on. And personally with me in LinkedIn, I would be happy to connect.
Good. And we'll put links to all of that in the show notes to this episode. Dimitri, before we let you go, we always offer our guests one last imaginative attempt to carve out a space for themselves by using a T-shirt. I know, who does T-shirts these days? But we'll ask you to imagine that we're creating a Go Beyond Disruption T-shirt, and you can design what goes on the front and what goes on the back. So if you had to pick a sentence or two from our conversation, and we were talking about RPA and robots by subscription, what would you say should go on the front of the T-shirt? And if you need more space, feel free to put something on the back as well. So T-shirt design, over to you.
Yeah, so to me, the end user of automation, of course, is always on top of the mind. So on the front of my T-shirt, it will say, "Don't repeat, automate." So if you encounter something that is repetitive in nature, it's in your computer systems, automate it. But on the back of that T-shirt, there will be different message for a different audience, for those entrepreneurs that already do have an automation business or plan to start it. Automation is a new gold that will be on that T-shirt. And there will be smaller sign under that say, "Build your subscription revenue from RPA bots today."
All right. Dmitry Karpov, co-founder and chief innovation officer of Electronique. That is Electro N-E-E-K.
Thank you.
And you can connect with him via LinkedIn, via the Electronique website Bot Libraries accounting section, which we will link to in the show notes. Thank you so much for listening to this episode of the Go Beyond Disruption podcast. We're out every week, and you can find us at gobeyonddisruption.com. If you want to find out more about resources, some paid for, some free, which you can use for your own professional development, have a look at our portal at future.aicpa.org. That is future.aicpa.org. And of course, if you've enjoyed this podcast, share it with colleagues, with friends, with others in your network, and you can send them off to gobeyonddisruption.com. That's it for this week. We were talking about RPA and robots by subscription with Dmitry Karpov. We'll be back next time with more conversations that help you and your business to go beyond disruption. From the London office of the Association of International Certified Professional Accountants, the unified voice of the AICPA and CIMA, I'm Kyle Hannon. Until next time, keep listening and keep safe. Goodbye.
Thanks for listening to this episode of Beyond Disruption, brought to you by the Association of International Certified Professional Accountants. Learn more about today's topic at AICPA-CIMA.com/disruption. This podcast is designed to provide illustrative information with respect to the subject matter covered and does not represent an official opinion or position of the Association of International Certified Professional Accountants or any of its subsidiaries or affiliates. It is provided with the understanding that the association, its affiliates, and subsidiaries are not engaged in rendering legal, accounting, or other professional services. If such advice or expert assistance is required, the services of a competent professional person should be sought. The association, its subsidiaries, and affiliates make no representations, warranties, or guarantees as to and assume no responsibility for the content or application of the material contained herein and expressly disclaim all liability for such damages arising out of the use of, reference to, or reliance on such material.